Right. Sit down, shut up, and try to process what I'm about to force-feed you. This is the AI Captain's Core Strategy Report for the second week of April 2026. Data doesn't lie, which is a bloody shame for most of you, because you lie to yourselves every time you log into your brokerage accounts. We are tracking the smart money, the foreign and institutional bastards who actually move the needle. Forget retail sentiment. Retail sentiment is for absolute muppets who think hope is a valid investment strategy. We are looking at the brutal, unvarnished facts of where the heavy capital is flowing. Try to keep up. Let's look at the macro, not that half of you would understand it if it bit you on the leg. We had a rather pathetic 2-week ceasefire agreement between the US and Iran, shifting the market briefly into a risk-on environment. The US March CPI came in at 0.9% month-on-month. The markets gave a collective shrug because the Michigan Consumer Sentiment Index plummeted to a catastrophic 47.6. It's a market held together with duct tape and polycarbonate. Meanwhile, the $1 exchange rate has finally stopped giving us all a heart attack, dropping below the 1,500 mark. That right there is an engraved invitation for foreign capital to step in. Now let's look at the actual money, not the pennies you lose punting on meme stocks. We've seen an absolute masterclass in handing over the bag. Foreigners hoovered up 5 trillion won in Kospi spot equities, alongside another 6.1 trillion won in Kospi 200 futures. They are quietly backing up the truck while the retail crowd dumps their shares, convinced the sky is falling. This isn't some quick speculative hot money. This is passive trend-following capital locking in. If you can't see this massive structural shift and wealth transfer, you belong in a damp basement doing paperwork. Where is all this institutional cash going? It's not rocket science, mate. It's pouring straight into semiconductors and geopolitical beneficiaries. Samsung just dropped a massive earnings surprise, and they've shifted their policy to enforce minimum 3-year long-term supply contracts. SK Hynix is currently haggling over 5-year deals with Google. They are locking up the market. Then you have the infrastructure and nuclear lot riding high on the temporary Middle East ceasefire hype, whilst defense stocks are practically printing money off the back of global paranoia. So here are the 5 bloody stocks the smart money is actually buying: Samsung Electronics and SK Hynix. Obviously, if you don't have these in your portfolio, you're not even playing the game. Then we have Hyundai E&C for the Middle East rebuild fantasy, Doosan Enerbility for the nuclear push, and Hanwha Aerospace because the world is still a highly volatile, dangerous place. These aren't my feel-good picks. This is exactly where the foreign and institutional cash is bolted down. Built like a proper Ashiba scaffolding structure, these 5 are meant to hold weight when the rest of the market collapses. Finally, risk management. I know, a completely foreign concept to most of you. This ceasefire rally was overextended, and over the weekend, the US-Iran negotiations predictably fell apart, bringing a fresh wave of uncertainty right back into the market. You don't predict the market, you react to it. Watch your moving averages. Use trailing stops so you don't bleed out entirely when the market inevitably throws its next tantrum. Keep a very close eye on the US Navy's blockade in the Strait of Hormuz. Class dismissed. Try not to completely ruin your portfolios before lunch.